Good day, everybody. My name is Victor Schaefer, and today I would like to talk to you about Bank of Canada rate increase. We were waiting for this one. Why? Because the inflation numbers didn't look good, and we were concerned that the Bank of Canada probably will increase the rates by 0.75%. We were hoping 0.5, but many economists forecasted actually 0.75. The reason why, again, it's based on inflation. If we want to know where the rates are going, there are three reasons what are affecting the rates. Number one, inflation. Number two, inflation. Number three, inflation. If you really want to know where the rates are going, pay attention to inflation. And today, on one side, we had a bad news because the rates went up by 0.5%, but it's also a good news. That means we're getting close to the end. I hope we're getting close to the end, but Bank of Canada will stop to increase the rates. We do expect one more probably in December, 0.25%, and maybe one more next year. And I hope that at this moment we will stop because, again, the increase of interest rate is definitely affecting clients who have mortgages, and it's affecting the real estate market. On the other side, it's very difficult to believe those predictions. Why? Because, whatever they're predicting, quite often it's exact opposite is happening. Just give an example. Exactly 12 months ago, Scotiabank predicted that by end of 2023, not 2022, by end of 2023, the rates, we will have 8 rate increases. Every time it will be 0.25%, and we will be sitting by end of 2023 by 2.25% Bank of Canada rate. We are not even the end of 2022, and we're already sitting at 3.75. Official interest rate today, Bank of Canada rate, is 3.75%. That means, again, whatever we're hearing from those economists, really it's so difficult to predict right now because there are so many issues, COVID and the war in Ukraine, inflation. There's so many areas where the economists are really getting it wrong all the time. So the prime rate, because of the rate increase, is now sitting at 5.95%. That means if you have a variable rate mortgage, your payments will go up by 0.5%. And let's say you have a 1% discount because your variable rate is based on the discount on the prime rate. Let's say you had a 1% discount. So 5.95 is the official prime rate now, minus 1%. Your rate will be 4.95%. There's a couple comments which I would like to make today, not just mention about the rate increase, because this is really getting close to me. Whoever is watching me on social media, they know that my goal is always to help people to get out of debt. And if they're struggling, they're close to bankruptcy, I'm trying to explain them how to do with the 7 steps to get out of this mess. And I had many situations where the clients, my preference was always fixed rate, and whoever has fixed rate, they're sleeping well at the moment. They're not concerned. But I had situations where clients requested from me a variable rate mortgage where the payments will not change. That means whenever Bank of Canada is changing the rates, your monthly payments are not changing. I don't like this option. I disagreed with the client. I explained them why, and after my explanation, they definitely followed my advice. And if they decided to go with an adjustable rate, I just placed it with, I just gave them the variable rate mortgage. But this is very important. Why? Because I'm getting right now phone calls, and not even clients who did business with me, but I guess they saw my video on social media, maybe they trust me, and they're really concerned. I got a phone call just a couple days ago from a client, and his payment was going up more than $1,000. And we're not talking about $1 million property, we're talking about $450,000 property. The reason why, because he had one of those variable rate option where if the rate is changing, your payment are not changing. But you need to understand, if you really follow this, if you really want to go get this option, you're really lying to yourself. So if the rates go up and your payments are not changing, something needs to change because it's a mess, right? It's a principal payment and interest rate payment. So what's happening in this case, if the rates are going up and your payment is not changing, that means your interest rate, the bigger portion now from your payment goes to the interest rate and smaller portion goes to principal. And it can not go unlimited because right now we have a crazy rate increases, and it come to a point, we call it a trigger point. That's the moment where your monthly payment or biweekly payment are not covering the interest rate portion anymore. So we're not talking about principal. We're just saying that your monthly payment are not enough to cover the interest rate payment. So if you think about it, if you're just paying the interest rate, that means your amortization, maybe original amortization was 25 years. Now your amortization is like 100 years because you're not paying anything. But if the rates will continue to go up, you're at the point that the payments that you do per month or bi-weekly are not enough to cover the interest rate. And in this moment, you will get a phone call from the bank and they will tell you that, your payments are going up, not just by a little bit, they're going up by a lot. And that's why I like the option where you have adjustable rate, which means whenever the Bank of Canada changes the rate, you get an increase. Yes, it's maybe not so convenient. Maybe you prefer not to pay more, but really it's a lot better because then the rates are going up. And the other problem is many banks are sending out the statements, mortgage statement once a year. Client doesn't really know what's happening. And maybe if he would get it on a monthly basis, he would see that, that my principal goes down, my interest rate goes up. So the clients are really kept in the dark and there will be a big surprise one day. So my preference, and again, whoever is following me on social media knows, my goal is always pay off your mortgage as soon as possible. And we have a mortgage product, we call it VS All-in-One, where you really can pay off your mortgage 2 or 3 times faster without changing your lifestyle. It's a revolutionary product. I love this one. I use this. I don't have a mortgage anymore, but there's a reasons why I still have this mortgage option. My kids, I have this option. My employees have this option. But today I don't want to talk about this product. You can contact us or just watch one of my videos. I explain how this mortgage option works and why you can pay off your mortgage 2 or 3 times faster without changing your lifestyle. The second area what I would like to talk about is the refinances. Because of the situation now with inflation, the rates are up. Inflation is up. People are paying everywhere more. And now the final problem is the bank calls you and says to you, you know what, your payments are going up. On one side, I don't like refinances, but there is some situation where it's better the client will go through a refinance. Why? Because maybe he has a credit card, maybe he has a car loan, line of credit, and everywhere the rates are going up. And now the mortgage rates are going up, mortgage payments are going up as well. So the client gets slowly but surely in trouble with debt. And this is just a question of the time when the client starts to default and maybe lose the house. So in this particular case, we do recommend refinance. We will remove all your unsecured debts. We will remove your credit card. We will pay them off. We will pay out your car loan. We will pay out your line of credit, because at this moment, it's not about interest rate. It's about cash flow. We need to free you up a little bit that you can breathe again. And that's what we do through refinance. But if we're going in this direction, what I'm really proud of, that all my guys, my entire team, our number one goal is whenever you're back to normal, we will help you to get back to your original amortization. And you really can do it only with this all-in-one mortgage product, because the advantage of this one is without changing your lifestyle, you will be able to pay off your mortgage a lot faster and we can go to original amortization. Why this is so important? Because if you watch my video about Canadian pension system, you will realize that if at the time of retirement you still have a mortgage, you will not be able to keep your house. You'll be forced to sell it. So my goal is, again, if you're in trouble, help you out with refinance. And whenever we help you out, help you to pay off your additional funds and original funds faster by using the all-in-one product. The final point which I would like to mention today, because again, usually I just say about rates, increase and this and that, but at this particular moment, I would like to mention one more thing. Because the rates are extremely high, you need to understand this is not going to be forever. Okay, so 5.95 prime rate. Last time we had 5.95 prime rate was in 2007. It's 1 year before we had a real estate crisis. Okay, so that means it's just a question of the time where the rates will go down. But at this moment, because the rates are going down, the real estate price goes down. In many areas, like in Winnipeg, we just went down last month 1.75%. But in some areas in Canada, they went down by 20% compared to the previous months. In areas like Calgary and Edmonton, actually the price is going up. So we see that it's not everywhere the same. In some areas, price goes up. In some areas, price goes down. Usually, the most aggressive areas where the price went up like this, they're actually who are suffering right now and the price goes down. On the other side, maybe not suffering because it's bad for the seller, but it's good for the buyers. And we had a major problem in the last 10 years, even in Winnipeg as well, with the bidding wars. And many of our clients, they were pre-approved, but they couldn't buy a house because every time somebody else offered a better deal and the client couldn't purchase a property. I really think that the 2023 is your chance. Is your chance really to purchase a property. Why? Because the real estate price goes down. That means more inventory is in the market. We have more listings. Slowly it's changing from a seller's market to a buyer's market. Now you have options. Now you could really maybe even do an inspection and still get the house. So if you go this road and if you buy a house in 2023, I think that's a good time. Why? Because as soon the rates will start to go down again. That means the real estate price will start to go up. And as soon the people will see that this is happening, all the people who are waiting at the moment, and that's a lot. According to the statistic, 56% of potential buyers put it on hold because they expect the rates will, the real estate price will go down. So all those people will be back in the market. It's for problem number one. Problem number two, we have about 1 million immigrants who are ready to move to Canada, but because of the backlog of paperwork, they cannot. All those guys will be in Canada as well. They all need housing. Problem number three, construction company have a major problem at the moment. Why? Because it's not profitable to build houses. If the real estate price goes down and the construction materials, even that lumber went a little bit down, but still all other stuff is still expensive. So that means they have to charge higher price for the houses they're building, but the real estate market is in correction. So that means people will just, why would I buy a house which is more expensive and I have to wait 6 months or 1 year? Why wouldn't they just buy a house which is already in the market for a lower price? So that means many construction companies are right now in a position that they cancel the contracts because it's not profitable. So we have three major problems. People were waiting, 56% of buyers. Construction company don't build houses at the moment because it's not profitable. And we cannot get those immigrants who already approved for PR status cannot get to Canada. All those guys will be on the market maybe in 2024. And we're forecasting that the real estate market will be crazy. It will be a lot worse than we had in the last 10 years, beating worse than everything. So my recommendation is, even that the rates are higher, it still makes sense to buy a property now. And here's the last point, which I would like to mention. If you get a mortgage, especially right now the rates are up. If the rates are the same and nothing is moving, it's not really a big deal if it's a bank or credit union or monoline bank. But in the environment where the rates are in extremely high position and we expect the rate decrease, let's say you would like to purchase a house, but the rates are not good. And then you will wait, the rates will improve, but the houses will get more expensive. Out of this loop. So my recommendation is get a house whenever you can purchase. Yes, you will have a higher rate, but when the rates start to drop, again, I have a team of professionals. I have 9 guys working for me. We will call you and we will tell you, look, now it makes sense to break your mortgage, pay a penalty, and get a better deal. But you cannot do this if you have a mortgage with RBC, TD, Scotia, Bank of Montreal. Why? Because the penalty structure is crazy expensive. I highly recommend you to watch my video how the penalty structure works, because I used 2 examples. And one example where the penalty to break a mortgage is $8,000, and to break it with the bank is $25,000. So we're not saying that it's a small difference, it's a huge difference. So if you get a mortgage in a high rate environment with one of the banks, you will not be able to lower the rates for the next 5 years. In our case, we will help you, we will monitor the market, and we will call you whenever it's time to break your mortgage. So that's pretty much everything for today. If you like this video, I would be more than happy if you could share it with your friends and relatives, because I'm pretty sure that this information is important not just for you, maybe for some of your friends and relatives. And until then, I wish you all the best, and I will see you somewhere in the virtual world again.